I'm Cher Russell from mining.com.au, and I'm coming to you again from the Rural Symposium in Boca Raton. But this time joining me is Rich Checken from Asset Strategies International. Rich, how are you?
I'm fantastic, and even better now that I'm here with you.
Thanks so much for saying that. It took me a bit to get here.
Yes, I understood. We talked about that flight from hell. So.
Yes, flights, plural.
Flights from hell.
A little bit of a hurricane, never mind.
Gotcha.
Now, I don't want to talk about my travel woes as much as they are entertaining for everybody else. I want to talk about the gold market. Obviously, this is a shared interest of the two of ours.
Yes.
Gold is experiencing a very interested period of buying and selling. And I want to recapture some of your presentation because off camera before, we were talking about how, Western markets are selling, or Western buyers are selling into this market, but the Eastern market is buying in. Now, this is a very unusual dynamic when prices are elevated.
Yeah.
Can you expand on why this is happening?
Yeah, and there's no question. So I call it the stealth bull market. So, we've seen for now 5 years prices for gold at all-time highs, and yet Western investors aren't in this. So it begs the question, who the heck is buying this? To a large part, it's been central banks. For like 13 straight years now, central banks have been net buyers of precious metals. That's what's giving the support and the stability to the precious metals market, or to the gold market specifically right now. And over the past 3 years, it's been unprecedented. So 2 years ago, most central bank buying in 50 to 60 years since I started recording these numbers. Last year, we didn't get there. We were only 96% of that, okay? 50 to 60 year highs. And then this year so far in the first quarter, we've outperformed the last 2 years' first quarters. So that continues. So even though China in May and June announced they didn't buy any gold, and they've been the #1 buyer, the other central banks are still buying. The other buyers are Asian investors, and a little bit now of family offices in preparation for the protection of their portfolios coming up to the November presidential cycle here in the US, which we expect will be a something show, to put it bluntly.
Choose your favorite four-letter word for that one.
Exactly, and it's not a golf show. Bottom line is we're seeing a little bit of family office buying, we're seeing a lot of retail Asian buying, and that is kind of proving itself out in the elevated coin and bar investment coming out of Asia and the Middle East, as opposed to the numbers coming out of Europe and North America, the developed Western countries. The other thing we're seeing is we're seeing an elevated premium in China for bar and coin investment versus what you'd pay in London. And what does that just tell you? When somebody pays a higher premium, does it mean they want it more or less?
Yeah,
they want it more.
That's very bullish for it. Yeah. Let's talk about the hidden, the very visible inflation that we've got now, and how central banks have got it wrong. Australia's experiencing a very similar wave of inflation to the US, but the Fed completely. I was about to use a very Australian word to describe something and just realised I probably shouldn't. I've got to be an adult. But the Fed completely got the inflation thing wrong. And you've got a couple of ideas behind this, don't you?
Yeah, there's no question. I mean, we talked last year about the credibility of the Fed and how I don't think they have any. But part of it is because I just don't think they're powerful to do anything about it unless Congress balances a budget. But they have a hand in this, and part of it is they've just misread the economy for so long. They called inflation transitory, they blamed it on other people, when in fact the Congress and the Fed created it, okay, between supplies and demand side on the currency. So transitory was wrong for a long time. Last year they came out and they said, you know what? We're seeing increased consumer spending in the US, and that's because, in their interpretation, that household savings were so strong and consumer spending was so robust that maybe we didn't understand how strong the consumer was in America. They're as wrong on this as they were about transitory inflation. The reason consumer spending is up last year and this year is because this year, everything that people need to buy is 3% more than it was last year. Last year, everything people needed to buy was 10% more than the year before that. Okay, everything costs more. They're just buying what they need and they can't afford it. So they initially, in the 5-10 years ago, when interest rates were low, they would pull it out of their house, their piggy bank. They'd take a home equity line, they'd pay off their debt or their finance their needs, and it was no big deal because they could refinance at the same price or lower. Now they're going 3% to 8% mortgage rates in order to do that, so that line of financing is cut off. Next, they went to credit cards. Credit cards went up to 1.2 trillion in debt at 29% interest. Okay, that is maxed out. That line of funding is over with. So where do people go next? They sell their gold, they sell their silver, some of the most liquid assets on earth. So we're seeing, I've got retail clients telling me, sorry, Rich, I have to sell this. I have to pay a credit card bill down, okay? Because we are embracing debt here in the West. In Europe, in North America, in Asia, they're buying real wealth. So we're buying claims on wealth, they're buying real wealth, gold. And we're seeing the biggest migration of real wealth from West to East of my lifetime at this point.
This is incredible because Eastern markets aren't known for buying at the highs. They actually always wait for a market low, and this is what's particularly unique about this bull market cycle. When we've seen the Asian market, especially personal consumption of gold in the Asian markets, they buy in at the bottom, they buy in at that low, and then Western markets, we love to buy in at the top, don't we?
Yes.
So this is an absolute reversal on current buying trends, which I think is extraordinarily bullish for the precious metal overall.
Well, you know full well, World Gold Council does a lot of fantastic research. They put out a lot of great data. I used one of those slides in my presentation this morning, and I'm happy to share it with you if you want it,
yes, please.
Or your readers. But the bottom line is, if you look at the net coin and bar investment in Asia, it is absolutely continuing to ramp up, and it's superimposed on there is the gold price. So we're looking at the tonnage, not just the value, but the tonnage of coin and bar investment skyrocketing as the gold price moves up to all-time highs in dollar terms. Okay, so as the price rises, they're not shying back, they're not being cost effective, they want more, and they're paying a premium for it.
That's incredible. Again, that is incredible and not something normally seen in a gold bull market.
Not at all.
Tell me, how do you see, let's talk about your clients in particular. How do you see them coming back into the gold market? Like if they're selling their precious metal now to pay down debt, when do you think they're going to buy back in? What will be that catalyst for them?
I talked to somebody on air a couple days ago, and honestly, and I'm being completely honest, I'm really not sure. I do think that the Fed has a hand in this. So the Fed has their goals, right? They want to get down meaningfully to a 2.2% inflation. They want to make sure that the labor market is still strong, although it's showing signs of weakening right now. They want to maintain high growth with the GDP.
It's a hell of a wish list.
They're never going to get to that 2%, not meaningfully, in my opinion. And they're already coming around to that. So we heard this in the testimony that he gave to Congress semi-annually. Jerome Powell, the Fed chair, basically said, well, we think the bias right now, he preached higher for longer and all that other garbage because he has to, but he said the bias for now is toward loosening monetary policy. They're going to loosen it long before they ever should have by their criteria. And I think when that happens, it'll give a little bit of relief to folks, and maybe they'll find the money they need for precious metals. My thought is find it now, okay? If you've got overvalued stocks, sell some. Take some profits, put it in precious metals. Right now, you've got the combination of low spot prices, yes, at all-time highs, low spot prices, because they're going to be much higher, and low or non-existent premiums. Take advantage of that right now during the summer doldrums and build up your allocation however you can find a way to do it. You know, a lot of people look at the stock market, they don't want to get out because it's at all-time highs. We've made like 30 new highs on the Dow or something this year, or whatever it is. If you look at the Dow priced in gold, okay, we are only 60% of the way to the dot-com bubble levels. So in dollar terms, yes, we're making new nominal highs, but that's garbage. The measuring stick of the US dollar for value is crap, right? It's worthless because the dollar is weakening all the time. It takes more to buy the same thing. If you measure it in something constant like gold, the Dow is nowhere near what it was in 1999. Forget about new all-time highs. Own gold. It protects purchasing power.
That is such a great place to leave the interview. I'm not even going to ask a follow-up question. Rich, this was a great conversation. Thank you so much for being here. And it was great to catch up with you again as well.
Always. Thank you for having me.